the masses will be interested in Bitcoin when it's at 200, 300, 500K. And that's very normal, right? If you look at how ordinary people think, it's just like I see someone panicking and then I panic. There's very little foresight and planning ahead and doing research because everyone's busy with bread and circuses, right? And that's just how human civilization has evolved. And I think we're still in that very small minority, which we did the research and we went down the rabbit hole and we're listening to the Bitcoin podcast with Walker and everything like that. And yeah, you're very early if you're listening to this. And people seem to think they're not early because Bitcoin is at 80K or it went up to 108. But I still think we're very early because go back to that test again. Go to your coffee shop and ask them how much they know. The other thing I think is
Samson Mow starts off by talking on the rising desire for Bitcoin in the face of increasing economic instability worldwide. He adds that Bitcoin is still the only really decentralized and censorship-resistant store of value, while conventional assets like equities and bonds suffer from volatility. He contends that this tenacity explains why Bitcoin has risen despite governments escalating geopolitical tensions and central banks manipulating interest rates. Market mood is currently dominated by worries about inflation, fiscal deficits, and regulatory crackdowns on cryptocurrencies. In the meantime, ETFs and growing adoption by sovereign organizations are driving an acceleration of institutional interest in Bitcoin. According to Mow, the majority of investors continue to undervalue Bitcoin's long-term prospects, which in the short run breeds mistrust and price suppression. However, he thinks that Bitcoin will eventually reach $1 million as fiat currencies depreciate. Please remember to like this video, subscribe to the channel, and enable post notifications before we delve further. Thank you and enjoy the video.
I'm still expecting Omega very soon, and there are direct parallels to the Weimar Mark when it was dying, that you started seeing very wild swings. It would go from single-digit percentages to double, then triple, and then negative when there was government interventions, and then up 100%, and then back down to single digits and thousands. So we're already seeing God candles very regularly. And I see people critiquing and saying, well, where's your God candle? But there have been 8 or 9 of them so far. We're seeing more volatility because Bitcoin is more valuable. So the swings are bigger now. It's just like when Bitcoin was at 1,000, right? When you had $100 swing, it's like, wow, that's crazy. And now it's normal. It's like you don't even notice it. But we're seeing $10,000 swings. And then eventually it goes to $100,000 swings. So the Omega thesis is still very valid, and I think it is still coming. And what worries me, or I don't know if worry is the right word, but what concerns me is we're not getting that slow and steady rise, which means the rise is going to be far more violent, simply because we're not going up gradually, right? And if it's not gradually, then it's sudden. And I don't think we're going to go to 58K, but as you said, anything can happen in Bitcoin, but it's not that likely. And the reason is the composition of the hodler has changed. The structural composition has changed. It's not just like you and me and Adam Back now. It is institutions holding MicroStrategy, like pension funds holding ETFs, investors in ETFs that have it in their Roth IRA or other investment vehicles that they're probably not going to touch. So it's a very different beast now than it was a few years back, right? You have people that bought IBIT, I don't know, let's say at 50 some odd dollars, or they bought IBIT when it launched at 20 some odd dollars, right? Like, are they going to sell IBIT when it goes to 12 if there was a big drawdown? Probably not, right? For them, it's a different sort of unit bias. It's like 50 to 20, not from 50 to whatever, right? So they're less likely to sell, first of all, and then they're less likely to sell when it drops because it's less scary for them because it's a different numbering system, so to speak. There is a huge information gap here that we have that the rest of the market doesn't have. But in terms of the price behavior right now, I would say it's just a fear of uncertainty. It's not necessarily about Bitcoin. We are correlated sometimes with the traditional markets, and it can be frustrating, but we always break from it. You know, we correlate for a while and then we break. That's why we're at, 80,000 today and not at whatever the S&P is at, right? We do go up against against everything. But right now there's a lot of fear about tariffs, one. Two, is just what is going to happen next, because the Trump administration, they're moving very quickly and they're just seemingly, trying to fix things in a very rough manner, right? And then there is three, the effort to lower interest rates on 10-year T-bills, and that's really just trashing the stock market, right? To make people invest in bonds. So there's just so much at play in terms of the macroeconomic, securities landscape alone, that I think that's bringing us down with it. And you compound that by the fact that people don't fully understand that Bitcoin is the safe haven, and you can kind of see this price stagnation. The masses will be interested in Bitcoin when it's at 200, 300, 500K. And that's very normal, right? If you look at how ordinary people think, it's just like I see someone panicking and then I panic. There's very little foresight and planning ahead and doing research, because everyone's busy with bread and circuses, right? And that's just how human civilization has evolved. And I think we're still in that very small minority, which we did the research and we went down the rabbit hole, and we're listening to the Bitcoin podcast with Walker and everything like that. And yeah, you're very early if you're listening to this. And people seem to think they're not early because Bitcoin is at 80K, or it went up to 108. But I still think we're very early, because go back to that test again. Go to your coffee shop and ask them how much they know. The other thing I think is a very big component of it is people think that there's more supply than there is, because we always say that there's only 21 million. The supply on the exchanges is going down. But then the counterpoint I see shot back is, well, then why is the price dropping? Right? But this has nothing to do with the supply. It's just people have to sell sometimes for various reasons. They could be liquidated, they could be deleveraging, they could be doing any number of things, or they're just panicking plainly. But the supply is dwindling, and I think that has to reconcile itself eventually.
Samson Mow also examines the audacious notion of issuing Bitcoin-backed U.S. government debt. On a far wider scale, this idea is comparable to El Salvador's Bitcoin bonds. In order to secure U.S. debt, the idea proposes to use Bitcoin, the most valuable asset in the world, to back 10% of a $2 trillion debt issuance. This has the potential to revolutionize the game if put into practice. It would encourage significant institutional investment, validate Bitcoin as a reserve asset, and even encourage other nations to follow suit. However, since U.S. debt is still the norm worldwide, it might also make it more difficult for smaller countries to issue their own Bitcoin bonds. Don't forget to subscribe and hit the bell icon to stay updated on our latest videos. We'd love to hear your thoughts in the comments. Now let's dive back into the interview.
There are only 21 million coins. Several million are probably lost. Saylor has 500K. The ETFs have 1 point something million. And then Cynthia Lummis wants to buy 1 million. And if they launch the Bit bonds, the ones designed by, sorry, I forgot the name, but the one for issuing $2 trillion of debt with 10% allocated to Bitcoin, that's $200 billion of Bitcoin, which is some 3 million some odd Bitcoin that they want to buy. That's really not sustainable. And even if you look at Saylor alone, he's taken off multiple times the amount of Bitcoin that will be mined this year. Just him alone, not counting everybody else. So Bitcoin is really already deflationary if you look at it from that perspective. So it just doesn't compute. And I think when things like this don't compute, it means that there's going to be a very fast reconciliation at some point, which is the Omega candle and a fast run to 1 million. I think it has a lot to do with how the audits of Fort Knox goes, or if there is an audit. If the audit comes back that there is not enough gold, the gold's not all there, I believe we'll see this sort of game play out where gold is demonetized in favor of Bitcoin, simply for that reason that you outlined. I think Saylor said the same thing, that you can kind of like take out your enemies that have been buying gold by dumping gold and buying Bitcoin, especially if you have more Bitcoin, right? So it's just a balance. Like, does the US have more Bitcoin or more gold? And do they see the Bitcoin as more valuable or the gold as more valuable? And I think another thing that we forgot to talk about the EO was this will now allow us to actually figure out exactly how much Bitcoin the US has, because there's a number that's often thrown out there of 200 to 220,000 Bitcoin. 95,000 is going back to Bitfinex, and the rest we don't know. The US Marshals have kind of said we don't know. So the biggest thing I think for the EO is really that we're going to find out exactly how much they have, and that might lead to us finding out how much everyone else has, because every number out there is largely an estimate or approximation. Because China too, like right now, if you're going by general public disclosures, the U.S. has less than China. China has 194,000. But there are also theories that China sold it, because there are some announcements in Chinese news that they disposed of some crypto assets. They didn't say Bitcoin, but they said we will dispose so much $billion of yuan, and this much billions of yuan, and this department will dispose this much. But we don't know. But if the U.S. comes out and says, here's our attestation, here's a signed message from the key that controls this, then I think other countries will start to need to verify how much they have. Otherwise, you don't really believe that at this point. Trust in government is at an all-time low globally. So I think there will be a race for more transparency, which is good for everybody. So the proposal was for the U.S. government to issue debt that is backed by Bitcoin, 10% allocated to Bitcoin, and you get paid 1% interest. And there is a boost in the coupon payment up to 4.5%, I believe, and that's capped off with the Bitcoin gains. And it's just a way to secure U.S. debt with Bitcoin, similar to the Bitcoin bonds that I designed for El Salvador. But I think it's a very different beast if the U.S. is issuing Bitcoin-backed debt compared to a developing country.
Samson Mow presents the concept of the U.S. government issuing Bitcoin-backed debt, which is a much bigger version of the Bitcoin bonds he created for El Salvador. Bitcoin would receive 10% of a $2 trillion debt issuance, according to the proposal, with investors earning a base interest rate of 1%, which could rise to 4% depending on Bitcoin's profits. This strategy might boost the dollar and validate Bitcoin as a monetary reserve by using an asset that can be proven to be scarce to secure U.S. debt. Samson points out that smaller countries may find it challenging to issue comparable bonds if the U.S. embraces Bitcoin-backed debt. Any issuance backed by Bitcoin would probably be classed as the highest tier debt, because U.S. treasuries are the safest debt because the U.S. government directly backs them. This would establish a new financial hierarchy in Bitcoin-backed products and eclipse comparable efforts by underdeveloped nations. Although 10% is a good place to start, Samson thinks that raising the amount to 20% will further improve the strategy's efficacy. Transparency about the exact amount of Bitcoin held by the U.S. would be a significant disclosure from this idea. Although precise numbers are still unknown, current estimates indicate that the U.S. government possesses between 200,000 BTC. A public declaration of the U.S.'s holdings might compel other countries to follow suit, increasing the transparency of the world's Bitcoin reserves. Such revelations would spark a race among countries to establish Bitcoin's place in financial markets, given the global decline in public faith in governments. Don't forget to like, subscribe, and enable notifications for more valuable content, and as always, happy investing.